Jamie, Steve, what's going on?
Monday greetings, everyone. What's up, Steve?
Hello, Jamie. Happy Monday.
It's Monday in California too, right? Not just in
Yes, it is.
Texas. Okay, just making
Dateline is
sure.
still where we're supposed to be.
All right, welcome everyone. We got a decent little crowd in here, especially for a July crowd. Today kind of felt like a summer day. Summer hasn't been so tame thus far, but today it sure felt like one of those days, and I'm sure Steve will expound on the action or non-action, as we could call it, here in just a momento when we get through all the introductory stuff here. So welcome everybody to another Office Hours. You got myself and Steve Gomez walking you through this one, and we're almost done with July. Next time we meet for Office Hours, it'll pretty much be done. We'll be into August, and can't wait for September. All right, so moving right along here, let's just make the lawyers happy real quick here and just get through the disclaimer. Just want to make sure that everybody in attendance is aware of the fact that all of the information we share with you in this webinar or any of the other 8 webinars that are coming at you every week is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that can legally dispense that type of information to you. So everything here and in all the other webinars for educational purposes only. And for the people that might be new to this webinar or any of the other ones, we always like to take a little bit of time here at the beginning to let you know about it's not just the award-winning technology that is Trade Ideas Pro, but it's the infrastructure and the community that we've fostered around the technology. All kind of starts up here in the upper left-hand corner with the trading room, Barry's trading room, the TI trading room. It's all synonymous. Barry is the moderator that's been there since day one and does a fantastic job at showcasing the way he uses Trade Ideas technology and is trading live, calling out everything. Everything is visible. And we have a great crowd in there on a daily basis. Could be 400, 500, 600 people in there, depending on the day. And Barry does a fantastic job at moderating such a large crowd as well. And over the years, we've got quite a few seasoned traders in there all contributing. So whether you're brand new or been in the chair for years, it's a great resource to take advantage of, not only because of Barry in there leading everybody, but the price, which is free, right? If you shopped around on the web for other trading rooms, you know that the ones that are somewhat good sure aren't free. So take advantage of that resource if you haven't already done so. Of course, today for the 5 p.m. Webinar, you got myself and Steve, as is always the case on Monday. And Steve's going to take the steering wheel tomorrow on Tuesdays for the Trade of the Week. Andy Lindloff's going to ride shotgun with him. Q&A demo is on Wednesday, and that's when we change it up a little bit. We bring in Dan Merkin, the CEO and founder of Trade Ideas, along with Brad Williams, our Chief Technical Officer. Always interesting with those guys. Peeks at what's coming down the pipeline in a developmental sense. Hopefully, maybe this Wednesday, maybe you'll get a peek at the paper trading option that's been in development for a while. Maybe not till next week, but who knows? You never know. Thursdays, Andy's Trading Studio, 5 p.m. Eastern. I ride shotgun with him. And finally, the Friday support session kicks off at 11 a.m. Eastern. We typically allocate 2 to 3 hours. If the crowd is big and boisterous, we'll go the full 3 hours, but it's basically anything TI related is fair game, whether it's strategy fabrication, basic navigation tips, or maybe it's Brokers Plus. Nothing is off the table for the Friday support session. So come and join us for Friday support session. It's always a fun time. Our other webinar series are the TI Universities. Okay, we used to offer one-on-one training sessions to every new user, but since our client base has gotten considerably larger over the years, we are no longer able to do that, and that's how TI University was born. So we have beginners on Monday, 201 Tuesdays, intermediate on Wednesdays, and advanced 401 on Thursdays. These get rolling at 12 p.m. Eastern every day. The content matter stays the same. So the best way to get the most bang for your buck is obviously to attend these guys live. But if you can't do that, if something pesky like a job gets in the way and you can't be there in live mode, We have all of these recorded and posted to our YouTube Trade Ideas channel. So once again, since the content is static, you can go listen to the recording, you can come in live, everything is going to be repeated. Only benefit of the live version is you get to ask live questions and get them answered in real time. So TI University, a great place to get yourself over the learning curve sooner than later. Always like to show everybody how our client base has increased since we introduced the AI module, the very first one back in 2016. For those of you who've been around that long, you know we've added 2 more in the meantime. So we've got 3 AI modules, but we've recently went on a developmental push to get everything kind of reconsolidated again, which is in the current version right now. Instead of viewing 3 different modules, you can just view 1 strategy panel and 1 trade blotter. That's the way I have it shown in my screen. So you'll get to see that shortly. But needless to say, the crowd has responded well to the introduction of AI, as you can see, following the years 2017, 2018. And it'll be interesting to see what the 2019 bar looks like once we're all wrapped up and done. Having said that, taking it one step further, outside of Holiday AI, we not too long ago released the full version of Brokerage Plus, which if you're a trader or investor and you use interactive brokers, you can use Brokerage Plus. It just snaps right into place, latches onto your interactive brokers account and allows you to use our interface, basically our platform, to execute your trades, buy, sell, flatten, get out of half, reverse. Basically what we feel is a much more intuitive trading interface than what currently exists in the IB workstation. And I will say this, we love everybody over at IB, but needless to say, their trading platform can be a little bit challenging. So with what we've done with Brokerage Plus, we just feel it makes it easier. And the good part about that, whether you're manual trading or using automation, you can automate strategies that you've created using our back tester and automate them within Brokerage Plus, and you even have the added benefit of automating Holly strategies as well. So lots of great functionality in Brokerage Plus, as the chart illustrates here. The live executions from our client base are on the rise, as you can see from the blue bars here. You can also demo trade in that environment as well. But the blue bars here are live executions increasing month over month. So that tells us, yes, people like it. People are using it. So if you haven't tried it out yet, load it up, see what Brokerage Plus is all about. All right, that brings us to today's content matter. And as always, I'm going to pass it on over to Steve and talk about what the markets did today, I guess is a good way to describe it, did or didn't do. So Steve, if you're ready, I'll kick it on over to you.
Sure. What kind of noise did the market make today?
Lots of whimpers and gasps.
All right, so welcome to my desktop over here. Got the spiders up on a daily chart. Just created a brand new indicator. This is the Gomez oscillator. Just kidding. This is a uptrend, and there's just no way around it. Key levels are still in place that we talked about last week. This is that pivot level, which was the all-time high back here, but is now current do not lose type of levels. And you know, I got to say, on Friday we had a lot of candles that looked really ominous. That big red closing candle, as we go through some of these charts, you'll see that on there. And I was quite surprised, and happily so, that the market kind of held its mud today, so to speak. Didn't lose its mud. Didn't follow through on those big ugly reversal candles that we had on Friday, and even the futures dipping far below the closing price. So, you know, looking at the data that we do have, we see kind of an area that seems to be coagulating here at the 20-day moving average. The low of the last 3 days doesn't really seem to want to get much below a 296.65 roughly. So keep an eye on that. I mean, that could be a base that we're trying to build, and as we've been talking about, it's all about, you know, building higher lows along the way. And a low volume, lackadaisical, lack of volatility type summer, you know, could easily, you know, continue to just grind this market higher, even though there's low volumes out there. It doesn't matter. It's price that's giving the calculations on P&Ls. not volume. So that's the story over there. I'd be nice to see these last three lows hold and build on that and move higher. Let's move over to the NASDAQ. NASDAQ, there is its Friday candle. Looks pretty ugly, but a beautiful stick save. Didn't breach the low of Friday at all today. No follow through to the downside. Quick glance shows me that that Friday candle did fill that little gap that we had over there. So same kind of a thing going on. Three lows here for the most part, sitting above its respective 20-day moving average over there in tech-heavy NASDAQ land. And again, really important, I think, to put this level back in here, that prior high back here. Look at that, perfectly acting as pivot support today and Friday and Thursday last week. So really good over there. The Dow, you know, just kind of always looking good. It seems like the last 3 weeks, every time I pull up the Dow, it is the sexiest of all the charts. It has the nicest looking shapes and the nicest looking levels, and the clearest picture being drawn. And kind of again today, here we go again. Tested that 10-period moving average on Friday, and again today, 3 tests that have passed on the 10-period moving average. Remember, the SPY and the NASDAQ were down here at their respective 20-period levels. So Dow is actually showing some buoyancy and some leadership in terms of, you know, where its moving averages are. And if we back up and kind of drop that to all-time high pivot level in here in the Dow, kind of makes sense there as well. So that's the levels we want to hold. So everything's, you know, holding up for the most part. No real harm, no real foul. Continual little mini higher lows along the way. As long as this little pattern continues, there's really no reason to deviate from what's working. Now, the one thing, the black sheep, of course, is the IWM. This is the Russell 2000. It was actually the trade of the week last week, and it never even fired. And the real interesting thing here is all this space. You know, these other charts are up here playing at these levels, but the Russell 2000, the small cap stocks are down here. They don't want anything to do with prior highs back here. Very curious and very interesting. And, you know, Andy and I were discussing in the last webinar that that's not necessarily a given that the NASDAQ and the S&P are going to drag this thing higher out of its doldrums. It's also a possibility that this thing just might start to roll over and get ugly and get the attention of the rest of the herd, which is up at all-time highs for the most part, and start to become a headwind or you know, throwing some water on a fire up there. If the IWM continues to slip and just kind of slowly get ugly, what I'm saying is the other 3 ETFs that we look at here, they're going to pay attention, and it's going to be a weight, it's an ankle weight or whatever you want to call it, because if we can't figure out a way to catch this market up at the value players, then if this thing rolls over, I don't know what's going to happen. I just want to call out the fact that that needs to be observed. That could be the fly in the ointment that the market doesn't like, and it's always hard to anticipate what a black swan could be coming out of left field or whatever. But the only thing we can really quantify here and say that's curious and point our finger at is this IWM. The small cap stocks do not want to play. Now, if it turns on a dime this week, all of a sudden we get a giant candle, well, get ready to throw everything else away and just focus on a possible couple-day run of small caps. If it happens, what I'm saying is when the small caps run, it's like shooting fish in a barrel. Anything that's got volume coming into it, has a decent looking chart, and is a stock under $10, might have a really good day if and when the IWM ever gets into gear. But if it doesn't get into gear and just keeps kind of dropping, it's going to get the attention of the other ETFs and the other indexes, and be a head scratcher and wonder, why is this not participating? Just a couple of other real quick thoughts. Gold is just unstoppable. I mean, it broke out down here, playing all of our perfect technical points, riding that 10-day moving average, got a little sloppy and junky in here, but, you know, created a nice wedge, popped out of that wedge last week, and here we are again, probably not going to be surprised to see this 10-period moving average hold the price of gold in check and pop it back up into the trend line. Silver is definitely playing catch up. When I say definitely playing catch up, this is what I mean. Our momentum line is way down here, and we can't even get a pullback in silver. Look at the momentum that popped into silver last week. Incredible, incredible. That is an eye catcher. And then the bellwether mining company talked a lot about last week, and I tweeted a lot about it as well in real time. If pause could get a close above and post a close above the 200-day moving average, then it's on. Well, it posted a close above the 200-day moving average, and it is certainly on. So a lot going on over there in the metals. So keep an eye on that. There could be some interesting setups. Newmont was a trade of the week a month and a half, 2 months ago. Let's try that again. Looks beautiful. I mean, this was a really good one. The trade of the week in Newmont, we kind of caught it early down here. Some grumblings were showing up, and that was roughly when the trade of the week went out for Newmont. So really good stuff over there. The gold miners and the silver miners have certainly not let us down. So that's all I've really got, Jamie. The takeaway is we're in a holding pattern. Let's just see where we go. A lot of alerts were going off to the downside on Friday, but they seem to have recovered today. So recovered in a decent fashion that makes sense, to where we could dig in and build a higher low and move higher. We'll see.
Good stuff, Steve. Thank you as always. Yeah, those metals, man, it's crazy, crazy good. Let me grab the mic here. We'll get back over here. Just let me know when you can see again.
Yep.
Good to go. All right. All right, ladies and gents. So, wow. Okay. Well, what was the market looking like after the first 15 minutes as far as expectations go? And I always like to reference my compare count window, which is looking at the large cap stocks. And when I say large cap, minimum market cap of $4 billion, and like to monitor the big ones like that are hitting highs and lows in the first 15 minutes with accelerated volume to try to give me maybe a little bit of peek into the future about where the market might end up. And today we had what I like to call a wishy-washy count, all right? A decent long bias, but only to the tune of 54%. And for those of you who attend regularly, I like to see at least 55% minimum and preferably higher to really have a lot of confidence that that might be the direction the market heads, either in the short term, or maybe sometimes the move is a little bit counter initially, but that's where it ends up before the day is out. So when we see something like this, it's what I like to call maybe a slippery slope. What did I write right over here? Yeah, 54%. It's going to be a little slippery. There's probably going to be some good longs and some good shorts. And then when we take a peek at, what the market actually did, initial move was down, and then once we put in these little bottoms here, we cruise back on up to the top end of the range, and even well, got to back it up a little bit. No, we're in good position here. Even spiked up to new highs, but didn't hold it. But the bottom line is the overall move for the rest of the day was a grind up. Once we got back over this 10 period, didn't give it back till pretty close to the end of the day. In any case, does not make things any easier. The market is never easy, but when we have this type of action, even increases the difficulty level, so to speak. But it was a long bias nonetheless. So how did Holly do today, the AI? Well, she wasn't sleepy today. She kicked out about 18 trades and got off to a kind of a slow start here. What I'm going to do, once again, I've got the all trades blotter up here, and I've got the all strategies blotter. So even though technically we still have 3 AI modules that we can see over here, and what were we up today? About not quite a point, right? $61 here, 40 takes it up to a point, but then we have to back this out, so 70 some odd cents. The numbers that you're seeing here are reflective of making 100 share trades in each of those trades there. So 18 trades, making just slightly under a point. Not the best day for Holly. I'd say after commissions and slippage, right, which these numbers do not reflect commissions and slippage. So probably cumulatively slightly down today. But lots of good things up here that we're going to talk about. Number one, we had two stocks that had dual entries. Now this pops up from time to time, and sometimes they'll be from the exact same strategy and be the exact same timestamp. But the two that we're going to look at today, REKR, we can see that there were 2 independent strategies that triggered this stock today, and very different times. So we had buyers stepping in on REKR at 9:16 my time, and of course I'm 1 hour behind Eastern in the Central Time Zone, so that's about 46 minutes into the open. And then we had strong stock pulling back, triggering the same stock, 1049 my time. And then we also, I'm just going to sort these by symbol just so I can find it easily here. We had this one right here, PVAC, first trigger at 1027 by float on. This is the same strategy, but from a different module, all right, and a different time as well. So this one was the first one, and then we had the second one here. So we've got some decent risk on to talk about today, which is the difference between where the AI closed the trade out and then where the thing ended up going after that. So these two plays actually have risk on between them, and then we've got a couple of other ones that we'll talk about as well. But let's just jump right into this PVAC trade, because once I show you this first entry, those of you who attend this webinar on the regulars, this pattern should stand out. It's something that we talk about all the time. So it doesn't look right there. Okay, now we're on the right one. Okay, so check this out. Yeah, you got it. Waleed, Christopher, everybody chiming in right there. You know what I'm about to talk about here. Let's see, I was just reading Jesse's question here. Why does the TI website say the AI had 2 trades today? Can't really comment on that, Jesse, since I'm not looking at the website right now. But there were definitely more than 2 trades. I don't know exactly how it's updating. We can get back to you on that, though. Okay.
Might have just been that one segment.
Right. Which, yeah, I bet it's only looking at Holy Grail, which is this module up here, and it only had 2 trades. It probably hasn't been updated to reflect all AI modules. That's probably what it is. If it's only showing 2 trades. Yeah. Okay, so back to the PVAC here. All right, first entry right here, 15-minute candles. This is the first 15-minute bar here. What did we have? We had a run up to the initial high, run back down, close to lows, put in a little bit lower low here, and then snap back up here, range bound again in this candle, and then Holly calls the buy, 3067. And we could call that first range break there. Let's just say the high. Notice my little high box isn't showing up here, Steve. I don't know why that's the case, but just to get an accurate number here, the high of that candle was 30.58. So 4 cents after the actual break, which isn't too far at all. Man, just a beautiful call from Holly right there. The strategy in question that delivered that one was float on. And we can see that we had 2 different versions of the float on today. But both of them coming in with very decent statistical probability, 66.7% and 61.4% respectively. So as I always like to say, that's the first gold star that we had from this trade, as are all of Holly's plays. We've got statistical probability on our side, no matter what symbol is coming through here. Now, when we notice, hey, look what just happened here on the 15-minute time frame, would be on same on the 5. 15-minute is what we're looking at here. We've got what I like to call an auxiliary pattern. Now, sometimes it is a strategy that looks for a range break or a cross, right? This one is not. This one's based around stocks that have lower float sizes. So when we consult our single stock window down here, we can see, indeed, 15 million shares in a float is considered small, typically the upper end of a small float for these strategies. And myself and Steve and Andy would be a float of 20 million shares. All right, so this one comes in at a float of 15 million shares. Didn't really, only did 276,000 shares today. But at the time that this signal came out, relative volume was a lot higher than where it was at the close, right? Still finishing rather strong at the close, 1.76, so about 76% above normal. 252, 276, nothing to write home about there, but the volume was strong, especially at the time of this entry and on the smaller time frames as well. So if you've got the 5-minute filter installed as one of your metrics there, you can always monitor that. So we've got strong volume, ability on our side. We've got this auxiliary pattern that's playing out perfectly in real time. That's what I like to call 3 gold stars, right? And when you see that, they don't always work, but man, they're working a lot more than they're not as of late. So 3 very good characteristics there. So you make the trade, hey, off to the races, never even acts like it's going to stop us out. Takes a little breather up here. Buyers and sellers kind of become equal for a while. We put in that initial high. What do? We go sideways again. And then not too long after that, about approximately an hour and 15 minutes, this is where the second signal comes on. All right. So this looks just like a human would trade this. All right. We got the perfect break here. We got the pause. Then we have a second range break occurring up here, in which the same strategy from a different module calls it right here. So all in all, just two beautiful calls from Holly and Pback today. Another added benefit, what do we have here? We got that 10-period fast line. We should call this the Gomez indicator, right? Because just staying well above it pretty much the entire ride until it pops out up here. Now, as we can see, let's talk about risk on, risk off in these two. So the first signal, Pvac, Holly gets a little antsy as it goes sideways right here. So this is the first half of the trade. She goes ahead and pulls the audible and says, you know what, it's going sideways now, starting to take a little pullback. I'm going to go ahead and book my profit. And we can see here that she takes that 29 cents, of course, only to have it be up a lot more going into the close. And on this one, risk off plays out perfectly. On the second entry, grabs it right here at 31.11 and pretty much top ticks it here. And we can see right here, made the entire timed hold for float on. So in that second entry, she just did not call an audible, just did what she's programmed to do, which is get out after a certain amount of time. And on both the float ons, the hold time is 60 minutes. But the bottom line is this: when we're in this trade and we see Holly getting out on the first one in risk off mode, we could have said, you know what, this thing is strong. I'm going to stay in it. I'm going to ignore Holly's exit signal here. We're still we're still considerably above the entry line. So this is classic risk on. Whether you stayed in the whole lot or peeled out a half of that first lot with Holly and said, you know what, I'll risk what I'm up on the second lot, use a break-even stop here. You could have done that with both of these here. Now on the second entry, or the second exit, you know, you would have been hard pressed there because that was the top tick, but you didn't know that at the time, right? We could have tried to eyeball it over here and look at the top of this wick right here, just butting up perfectly against this area back here. So eyeballing that daily chart could have given us the confidence and went, you know what, probably a good time to get out here. And, you know, especially after we see this candle form too, we might have thought about doing it in this bar here. Certainly once we get down here and get a little bleedy, but even if you held into the close and didn't top tick it up here, you still made some really nice gains in PVAC today, because, you know, up here, let's see, what are we showing here? About 1.76%, but at one time on a 3067 entry, we were up here at 3182. So that's a nice percentage gain up there as well. However, not near as good of a percentage gain as this little guy right here, which is one of the lower dollar stocks that Holly kicked out today. Matter of fact, we only had one other low dollar stock. It was this little $6 one that didn't do so well. But this one, boy, sure kicked out some nice percentage gains today. Wrecker, which I do believe is some type of artificial intelligence for the automotive industry. Recor systems. Let's see, the first entry was buyer stepping in. Yep, check the timestamp here. Yep, REKR. Once again, wow, Holly in reduce risk mode. Notice what she made in this one in risk off mode. Notice what happened as soon as she calls the buy here at 328. We get a little push up to 339 in that candle. And then we're just hugging the entry line for 1, 2, 3, about an hour, okay? And this is the classic, you know, my eyes can tell me right now without even looking a lot of the time at the reason why Holly got out. If we see sideways action, that's when she's more likely to perform a reduced risk audible, or once you're up and we flatten out, a profit save audible, and that's exactly what she did on this one here. She reduced the risk, made the entry, it's just hugging the entry line, got tired of waiting and goes, well, it's not working, so I'm just going to go ahead and plug out for a flat. Sounds a lot like a human, right? Been there, done that many times before, only to see the thing turn and burn in our favor. And so, once again, Holly gets out pretty much right here at the bottom of this candle for a flat, only to have it jump right back up in the next 15 minutes. We could have taken some comfort in the fast line here, as always, right? So we had statistical probability, we had the fast line acting in play for us, but guess what? Guess what we're just on the verge of here, right? A stronger breakout. And we did do that, right? That's a nice little range break. We just had a little regression back, which is not unheard of. What's the other third star here? Big volume in this little guy today. Usually only kicks out about 335,000 shares on a 3-month average. Finished today at almost, not quite 1.2 million, 1.148, with finishing volume of 3.73. And this relative volume was a lot higher back then. So if we could have stuck in based on some of those parameters there, we got statistical probability on our side. It's working. Stop loss has not really been even, had a run at it. So same song, same dance here. We could have kept that position, or maybe flatted half with Holly and kept the other half. Once this candle was done, if we could make it into this one, that break-even stop would have kept us intact for the rest of the day. And then we had the second signal come out, and this one was about an hour, close to an hour and a half after the original one. Oops, excuse me. Okay, sorry, I got those backwards, ladies and gents. My dyslexia is kicking in here. Okay, so that was the first one. Okay, that makes a lot more sense now. But the whole while we're in this trade, what should we be thinking about? All right, we're testing the fast line. We're coming back up here to a range break. Then, after the range break has occurred, we get the second signal. But to be quite frank with you here, in this first one, if we're not tempting the stop loss, not even getting below the fast line here, well then ideally we could have made a second entry here. We had no idea that this guy was going to kick in here, which doesn't necessarily mean we would have had to add here, but it certainly would have given us confidence to stay in the trade for the remainder of the day. Sorry about that. I got a little confused on that one. First entry here, second entry here, but in between the first and second entries, we had that auxiliary pattern play out in the range break. All right, so nothing's ever easy in the market, but when we have all of these factors lining up here, we got high volume, we got statistical probability, we got the fast line being adhered to, and then we see an auxiliary pattern after the first signal, followed up by a second signal from a different strategy. And if that doesn't give us confidence to stay in a trade, you'd be hard pressed to find something that does. All the while, and just sticking to that fast line like glue, right? So a really good chance to stay in this one for the duration. So even though Holly was a little lackluster on overall performance today, just between those two plays right there, the PVAC and the REKR, some really nice opportunity not only to stay in those trades, but also to leverage those trades and add to them. Yeah, Steve, I see your question here. When I'm referring to the fast line here, this is the green line right here. It's the 10-period simple moving average, all right? And, once again, I'd like to give Steve credit for exposing me to this simple moving average, because when something is really in play and the momentum is kicking, a lot of the times you'll see it just never really go below that fast line, all right? Let's see, let's go back to PVAC. Notice how PVAC right here, after this signal right here, stays above that fast line, all right? And a lot of the times when you get a candle close below that fast line, that can act as a pretty good indicator to get out, because, close below the fast line indicates that momentum is waning. All right, no problem, Steve. All right, so those were the two superstar trades today. Now let's talk about some of the other ones that weren't PVAC or REKR, and talk about risk on in those as well. So here are the usual suspects. None of these are just knocking the ball out of the park, but let's talk about WPM, because it was one of the short sales today. Once again, only 3 short sells in Holly's 18 trades, so definitely a long bias today. So classic case here. Holly calls the short right here at 27.34. Now, a lot of the times they go right for us, they take off, but this one, not the case. We get short here. Not only do we get a little bounce up, but we get sideways action about half the distance to the stop. But the important thing is, stop was never triggered. And that's really why we have stops. If we place the bet and we're wrong, this is how much money we're willing to lose. So this one did get about halfway there, but in the end, ended up curling over. Steve, that asked the question about the fast line. Check this out. We get short here. We're out of the money for a bit, going sideways. Look what happens as soon as we dip below that fast line there. And we get a close and then click, 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 click. All right. So Holly closed out WPM on a reduced risk. Once again, sideways action. That's when she's more likely to execute the audible of profit save or reduce risk. So she closes the trade right here and books a 14-cent loser. But had we stayed in it with our original stop price, by the time the close had come around, we could have gleaned 18 cents. And even though this is not a big numerical difference here, between 14, let's see, 28, 32 cents, that's a 32-cent spread in there between losing 14 cents and making 18 cents. So pretty good example of the using risk on, sticking to our hard stop and keying off that fast line when we get the close. That's when the thing caved in there. So that's a good example of risk on spread right there. And let's take a look at this guy right here, NGL, which is a long play. Holly gets long right here at 15.05. Get a little bit of a pull down here, only out of the money a nickel or so, from 15.05 down to 15, maybe 14.98, just hovering right around the 15 level. But once again, our stop's way down here at 14.80. So, once we see this type of action for a good hour, hour and 15, hour and 30 minutes, once again, we have flatline action. And more than likely, that's when she's going to execute that reduced risk. Ends up taking her 1 penny loser. We could call that a flat, only to see a little bit later down the road, 1, 2, 3, 4, about an hour later, what do we get? We get a perk up to the fast line, and we get a close above the fast line, and then for the rest of the day, just boom, 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 adhering to that fast line like glue. So big difference there of 19 cents between -1 and +18. Hey, everybody would much rather make 18 cents than lose a penny. So, not as big as we're typically seeing with some of these risk-ons, but the day has to be a little bit more of a trendy day before you get large risk-off, risk-on spreads. But some notable ones here today, because it's really all about the technique. Sometimes they're going to be small, sometimes they're going to be big. But just using some basic factors like, okay, well, how far down did we go? And then once we got down here, not even halfway through the stop, we got this nice little flat line action. And then you can key off some of these other metrics like the fast line, volume, things of that nature. In the case of NGL today, wasn't really doing a whole lot of volume either. WPM, let's see what it finished at. A little bit above average on that one. All right, Steve, I was just soaking up your question here. The profit target, smart stop, and swing exit values. Now, if you're referring to the single stock window, I'm pretty certain you can't put these AI metrics on any, these are the only places that they're currently available for the AI. Now, any stock that you pull up at random, whether it's the SPY or anything else, you're going to notice that we have the swing exits. You can add smart stop to this level here. But as far as the swing exit and the profit target, Steve, I'm not really sure about that. I don't want to say no unless they snuck it in without me knowing about it. All right, so let me just continue to scan here. I think that's pretty much it for Holly and risk on versus risk off spreads, other than the REKR and the PVAG just being stupendous trades on a day like today. A little bit of opportunity in 2 other stocks for some risk on risk off spread, and that's about it from Holly today. So, as always, and today, a lot of stretched out stocks hitting highs, stocks hitting lows that I typically look for nice tight range breaks. There wasn't a whole lot of quality out there. The timing was really off. If they were hitting highs, they were too stretched out, didn't resemble a range break at all. Same way to the downside. But as always, there were a couple of choice plays to the long, or one I'd say to the long side, two to the short side that met my criteria, that also had volume accompanying them as well, which is important. So let's take a look. Let's just take a look at the long one first, which was good old AMAT. Blast from the past, trade the stock all the time back in the olden days. So looking at the 15-minute candles here, we got 1, 2, 3. We got a nice 45-minute range break with volume on applied materials in the first 45 minutes here. So we can see opening, we had a gap accompanying the nice first green bar here. We get a little tightening effect right here in the next 30 minutes. And then boom, we just barely wick through on a new high there. And we can see above the line, it hovers for a little bit, kind of like what we see in Holly plays. Got through the entry line and then just kind of hugged it for a while and then slowly ground up the rest of the day. Once again, what do we have there? That 10 period sticking to it like glue. And AMAT was doing some significant volume today. Closed out at 2.83 on the relative side. Only kicks out about not quite 10 million shares on the daily average, and did over 21 million today. So quite an active day for AMAT today, a gap up and a continuation, but a nice identifiable range break there on the 15-minute time frame. With a relatively low risk, this thing never even pulled back, but if we were going to assign a risk to it, it'd be the bottoms of these two candles right here, which are pretty much equal. Usually it's the prior 15-minute candle, not including the entry candle, but those are pretty much lined up in the same spot there. So that little area right there, not a huge move in AMAT today, but still a lot bigger reward area than risk area right there, and a fairly big name. Okay, and out of this window right here, like I said, everything else was pretty much just stretched out, not adhering to a pattern as concise as this. And we did have a couple come through the downside versions today. So in this version today, we had HDB come through. Of course, HDB is a bank, and a few of those banks were weak today. Steve, I might be experiencing network difficulties. Can you hear me okay still?
Yeah, it's fine. It was only a small hiccup.
Yeah, I don't know why that came over, but just checking. So HDB kind of looks like the inverse of what we saw in AMAT today. Gap down with a big red bar, and then 1, 2, 3, 4, a good hour, almost an hour and 15 minutes of consolidation right here in a very tight range before we finally broke that little plane and just marched lower. Notice in this one, 10 period average acting in the opposite effect as what we saw in AMAT, tapping it down the whole way, and pretty much the entire move down, tap, 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 just barely flirting with closing above it in the last 15-minute candle there. So HDB, really nice entry, risk about right there on the prior 15-minute candle. And about I'd say, I don't know, we're pushing close to a 2-to-1 there. Maybe it's a 1.8 or whatever, but on a day like today, not surprising that we don't have a 2 or 3, risk to reward ratio there. But just a nice, clean, pristine pattern there. And then lastly, this guy right here. Now this one took off a lot quicker. So, hey, it'd be nice to get this price up here, but even if you chase this thing about a quarter of the way down, you had some nice profit potential in it. Not a big gap in this one, just a nice little 45, close to an hour consolidation before this level right here was broken. Let me back up here because HDB, let's not forget about volume, right? Relative volume was a lot higher during this break, and volume on the 5 and the 1 minute were off the chart. And then the same thing was applicable to Casey today. Not quite as big, but still finishing the day at 1.76. These are the finishing relative volume numbers. And typically in cases like this, they're a lot larger in that first 1 or 2 hour period. 5-minute, 1-minute volume were off the hook pretty good as well. So nonetheless, I probably wouldn't have wanted to chase this thing much more than a third of the way through this candle. But we got a nice release here. If we just say somewhere around 164.40 was a good entry point. Hell, even down to 30, 164.30 down to 162. Not a bad move in Casey. Just happened a lot faster than what we saw in the HDB and the AMAT. But quality play nonetheless. A lot of this type of action today too, getting all the way down here and then boom, reversing all the way. So as far as anything from opening range break land, just a couple of shorts and one quality long. And that is about it, ladies and gentlemen. I will give this one an honorable mention, and this thing hasn't been that productive lately because turbo down, family no support, things at all-time lows for obvious reasons of where we are in the market. But this little mink right here, first signal was, let's see, as it was getting below this opening 15-minute candle here. I hesitated, didn't pull the trigger, but we had a nice move from about 645 all the way down to 606, which is a pretty big percentage gain move. And then what we have here, we had this bottoming wick, and I was thinking to myself, man, these things have been bouncing pretty good lately, but once again, didn't really trust it. And boy, I wish I had have, because that move was bigger than the almost as big as the downside move here, which I've noticed that a lot of these, once we get those bottom ticks like that, I mean, this thing looks like it's on a death spiral. But like they say in the markets, some of the biggest snap reversals can be in a down market, and some of the biggest snap reversals can be in a stock that's at all-time lows on the upside as well. So we'll give Mink honorable mention there, and that one came in at 2.78 as well. And by the way, this is just one of the windows. There's another one, which is turbo up, family no resistance. So these are the guys at all-time highs, which didn't really produce a whole lot of quality today. Scrolling through these, basically the signals, the volume was coming in late. You look at OTEX right here and you're thinking, oh, that was a really nice opening range break there. But look at the volume, right? These windows are geared around a high volume accompanying these things. So that's why I'm not really showcasing a lot of these today, because the volume was there, but like clack, see, barely missing the volume. There's no volume at the break, therefore I don't really, I want to find them with volume. Once the volume kicks in, we've missed the point here, and you really have to be meticulous about not chasing these guys, okay? So just for clarification, this is the downside version, this is the upside version. Now, if you want to try any of these windows out, whether it's these two or my regular turbo breaks up or down, just cruise over here to channel 4. And once you do that, you're going to find all of my favorite windows, Steve, Andy's, and Sean's. And you can just right-click in any of these guys and save them to your cloud and give them a spin. All right, looks like we're right at the top of the hour here with a few minutes to spare here. So I guess, Scott, if you're ready to walk us out, let everybody know how they can save a little bit of cash either on an upgrade or a new subscription. We're ready for you.
Right on. Thanks, Jamie. A couple items on the way out. We've got a new series of ebooks. They're free and they're very informative, so get them while they're available. Trade-ideas.com/setup is the URL to go to. Just put in your email address and you can get downloads to all three. Each one has 2 chapters, and Jamie and Steve both contributed chapters to them, so check it out. There's a podcast. We put up new episodes just about weekly, so you can search for Trade Ideas Podcast wherever you listen to your podcasts and add us as a subscription. And then you're ready to get the next one, and you can go ahead and scroll through the previous issues. There's some with good interviews that have good guests. There's a code that's good this month, Holly in July. Use it before the end of the month. All caps, just like you see on the screen, because it's case sensitive. It saves 15% off the first month or year of any Trade Ideas subscription or Brokerage Plus. Those of you that are standard subscribers can also use this to do an upgrade. So keep that in mind if you want access to all the premium stuff. If you have any questions, shoot an email to info@trade-ideas.com. That's the best place to send any questions. It goes right into our help desk software and gets routed to the appropriate team member. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. Trade Ideas Pro is our Facebook handle that you can follow and share stuff with your friends. We'll have a recording of this up later on tonight or tomorrow. Thanks, everyone. Thanks, Jamie. Thanks, Steve.